This is your LMAX exchange technical update for Friday, October 20th, 2017. Euro dollar. So the question continues to be, is the euro consolidating ahead of a bullish continuation, or are we seeing this potential formation of a top in 2017 for deeper setbacks? We're of course going to need to break down below the neckline, which comes in at 116.63, the low from August. But again, we also have support in the form of the Ichimoku cloud bottom and 100-day moving average that the market is going to have to break down through, also in that area, to suggest that we're topping out in 2017. Until then, the market remains in a bullish, constructive pattern and is suggesting that it could continue to push higher to fresh 2017 and plus 2.5-year highs. If we break back above 119.10 and close above 119.10, which would be that area where we should have seen that right shoulder, a close above 119.10 would really negate this toppish outlook, or certainly downplay that possibility in favor of the bullish resumption. So again, a consolidation right now. Are we going to head for the head and shoulders top, or are we going to see a bullish continuation? 119.10 a close above, or 116.60 a close below will give us that next clear directional insight. Sterling dollar. So cable chopping around right now. There is room on the short-term horizon for some deeper setbacks. We could even see a breakdown below 132.27, that recent low. But once we get down below 130, there's a lot of good support. There's the psychological barrier, of course. There's a Fibonacci retracement level, a 78.6 fib retracement off of the move from August, that low, up to the 2017 high that we saw in September. And then, of course, we have that breakout area, that previous resistance now turned support from earlier this year, down at 127.75. And so setbacks are viewed as limited. The market is seen now putting in a longer term base after putting in that plus 30-year low in October of 2016, and the breakout above 27.75 this year was a bullish breakout. Still, again, short-term setbacks could be seen below 130, but should be supported ultimately for that next push back above the 2017 high, up around 136.60 and into the 140 area beyond there. Dollar yen. So dollar yen isn't really anywhere at the moment, with the market consolidating above 111 and below the yearly range high, a range that is defined for most of this year up around 114.50. And so we need to see a break back below 111 or a break up towards 114.50 for clear directional insight. If the market breaks down below 111, it would open the door for a retest of the 107.32 low from 2017. If we break back above recent highs that we're seeing at 113.44, it would expose a move up towards that range high in the 114.50 area. Euro Swiss. Euro Swiss mostly consolidating overall. The price action is constructive following breakouts above 110 and 112 in 2017 and a push to a 2017 high at 116.24, the highest levels the market had been at since January of 2015 when it broke down below that 120 floor. If we break back above 116.24, it'll open the door for a move back towards 120. We could still see, though, some consolidation and even some setbacks, but setbacks now should be very well supported ahead of 112. Aussie dollar. So Aussie has been chopping around after a little bit of a bounce over the past few sessions, but overall this is a market that is expected to be well capped into rallies in favor of a lower top, ideally below 80, and a continuation of declines back below 77.34 and down towards the 75 area. The market is showing signs of topping out in 2017 since putting in a plus 2-year high at 81.26. And so again, a lower top is ideally sought out ahead of 80 in favor of that next downside extension. Dollar CAD. So dollar CAD has been trading just off its 2017 and plus 2-year low after the market had collapsed over 10% from earlier this year down to 2062. But we've since seen the onset of a correction, a minor correction in that still shows the room for plenty of additional upside to allow for these medium-term studies to unwind some more. The next key resistance point, which should be tested if this correction continues, which has every possibility given how extended these studies have been, is 27.80, the August 2017 high. Setbacks from here should ideally be supported on a close basis above 123, with only a breakdown back below that level to delay the recovery outlook for dollar CAD. Kiwi dollar. So the New Zealand dollar has wasted no time breaking down to a fresh multi-day low, taking out recent support that was in place around 70.50 area and confirming a fresh lower top at 72. This now exposes the next drop back towards the 2017 low at 68.18. Remember, the market recently traded up to a plus 2-year high of 75.58, and so the setbacks have been quite interesting to see. And again, this latest breakdown does expose a retest of the 2017 low. SPX 500. Okay, so the S&P 500 has traded up to its next resistance point around 25.65, a fresh record high. The reason why we have things color-coded here is because if you consider the recent move that we had seen in the S&P 500 before it broke out, that was back in August. The market put in a record high at 24.90 roughly before trading down to about 24.15 roughly. And so if you consider that 75-point move and you project it higher, the equal move higher takes us up to 25.65, which is where the market is struggling a little bit right now. And so it would be interesting to see if the market does stall out here, given already overbought daily, weekly, and monthly technical readings in a market that's been trading to record highs for several years now. Ultimately, though, as we've been talking about, we need to see a break back below 2,500 right now at a minimum to suggest the market is seeing some pressure taken off the top side and maybe considering a more significant decline. Gold. So gold has seen a pullback this week, but ultimately it looks like the market is finding some good support from the previous week or a couple weeks back down at 1260. And so the market should be looking for that next higher low ahead of a continuation of gains. Although we've seen setbacks over the past several months and sharp ones in that, they've always been well supported and no reason to expect a change there. And so this latest setback by 1260 should be supported ahead of that next major upside extension beyond the 2017 high at 1357 and through the 2016 peak at 1375 further up. Only really a break back below 1200 would compromise the constructive outlook for gold.